For sure. One, beautiful jacket. Yeah, we're starting to see some supply come back online, but the problem is the supply is in the wrong place. So people are leaving the big urban centers, and that's where you're starting to see a lot of supply come back online. That in the Midwest, people are really trying to find properties in the Southeast, Southwest, inner mountain regions. So the supply is there, but it's really not doing a lot of good. You saw borrowers really take a bit of a breather at the end of June. They were kind of fatigued. They were burned out. They were priced out. Rates were going up. And now they're coming back because you're starting to see more supply, or at least there's rumors of supply, and interest rates now are back down below 3%. So we're back into a heady market.
Tim, do you think that this is a trend that's going to continue, at least, I guess, in the short term? Because I think that's a big question that a lot of potential home buyers are trying to wrap their heads around, or really trying to figure out at this point, is whether or not we're going to continue to see that slight uptick that it seems like we're seeing in supply so far.
Yeah, it's going to come back online. I mean, we'll get more and more supply. The problem is we're 6.5 million, according to the National Association of Realtors. You're about 6.5 units behind where we need to be. That's where the demand is. So that you're seeing that reflected in home price appreciation. The average sales price has gone up 25% year over year. Average values are up 15%. But now you're seeing it in the rent side too, because again, people have a bias towards living indoors. They got to go someplace. So they're going to be going up. You'll see supply start to come back online, but we need to find a way to get the builder supply chain back working again, because that's really what the missing link in this whole puzzle.
I want to talk about lumber prices and the effect that the huge drop in lumber prices from about 1,700 all the way to down below, I think, 500 today. What effect is this having on input costs? I know at one point it was adding as much as $35,000 to a new home, and a relatively medium-sized home, and especially on the entry level. How is this affecting the supply situation?
Well, I think it helped. Helped with the pricing in the sense that builders were able to offer more price or higher prices. And now that lumber is backed off, the prices are staying, they're sticky, right? So the builders are keeping that extra profit. But you're seeing other input costs, both amenities, other types of raw materials that are still artificially high. They need to come back down. I don't think it's really affecting necessarily the supply in any material way, but it did give builders the opportunity to raise the cap on what they were charging people. And again, they're slow to bring that back down. They're going to keep that as extra profits. And again, while you have all these other input costs, you've got labor shortages, skilled labor shortages, you've got trouble finding buildable lots. You still have regulatory costs that are adding, 25, 30% to the cost of a unit. So that makes it really cost prohibitive to get properties in at that 250 and below where you really need it. So you're seeing most of the properties on the upper end, 400 and above, 400,000.
Tim, we also got the comments from Treasury Secretary Janet Yellen yesterday when she was asked about whether or not she sees any overheating in the housing market. She was saying that she is concerned about what she's seeing just in terms of the price of houses, and then also obviously what that means for affordability down the road. But when you take a look at the housing market, I guess, and compare it to what we saw just a year ago, and of course taking everything into context just in terms of the resurgence that we're seeing in the economy, are we seeing any overheating at this point in housing?
Well, it's hard to say, 15% a year appreciation is tepid. That's obviously too hot. I mean, you really need to start thinking about how you take a little bit of air out of this balloon and maybe think about how you can get interest rates up a little bit. So right now the Fed is buying anywhere from 40 to 80 billion in treasuries and mortgage-backed securities every month to kind of manage that interest rate down. Well, I think we've already got it managed down. We've got the affordability. We probably need to lead left up on the gas pedal a little bit, let interest rates rise a little bit, and slow this down. We did the same thing in 2013 through 2014 when we had the similar sort of appreciation rates. 2018, 2019, we did the same thing. You let interest rates rise a little bit, and it just takes some of the energy out of this housing market. And you really need it before you let this thing go hog wild for another year or two, and you've got 30% appreciation, and then interest rates go up, you could have a nasty fall.
Yeah, and then on the flip side, we look at the rental market. You're noting to us that rents are up 10% year over year. A lot of people are already paying over 50% of their income. And I'll just tell you my personal story. I just got a new place, and I'm worried about the re-signing in 1 year because I got a pretty good deal. How is this affecting the rental market?
Well, I mean, it's exacerbating an already terrible situation. If you've got, what is it, 10 billion renters that are paying 50% of their income every month just for rent costs. That's just unsustainable. That's why you see President Biden looking at these infrastructure plans and trying to figure out how can we actually put, a couple $100 billion into housing, find a way to get more supply, find a way to get more people qualified for vouchers, housing vouchers and whatnot, some sort of assistance, take down some of the economic barriers to home ownership, rehab properties, repurpose certain structures to make them more, residential focused and things like that. This is just an unsustainable problem, and there's nothing you can do other than to add supply, or well, it's really the only thing you can do right now is to find a way to add more supply to the system to cool it down.
Tim, we were just talking about in the last block the rise that we're seeing in the number of COVID deaths. We've seen a rise in the number of cases here across the U.S. We know that obviously pretty substantially impacted the housing market going back to last March. I guess when you're seeing those types of headlines, how do you see that potentially impacting housing, at least over the next couple of months, as we do see these trends come to fruition?
It's a curious one, Sean. You got to figure out, so are people now kind of desensitized to it, so they're conditioned that, look, this is just going to be, a way of life now. This is just going to be part of life, so I'm not as concerned about it. Or right now, were they just getting comfortable that this was getting behind us, and now they're more anxious, and that anxiety is actually driving them to, urgently seek out, more space, greener space, bigger space, all those things. Particularly since, look, people are looking at their house now, not just as a place to sleep, but it's their gym, it's their school, it's their daycare, it's their entertainment. So I'm interested to see how this plays out, because quite frankly, this is the only housing market I've ever seen where anxiety is driving demand, where normally anxious people don't buy houses. You don't buy a house when you're anxious. You don't make the biggest investment of your life, but that's been completely turned on its